Welcome to Stock Charts Trading. Today we're going to be talking about megaphones. And megaphones basically is when you want to get somebody's attention, when you want to say something loud, when something's extreme. And that's exactly what a megaphone pattern is. So a megaphone pattern is an extreme outside mark. What happens is you got the uptrend and then you got this consolidation, but it's an extreme consolidation that gets wider and wider as it goes. But here's the great thing about it is it's telling you it's going even bigger. I know it's hard to think because when we think of a consolidation, we think of a small ABCD pattern. We think of a small flag or something like that. But with a megaphone, basically, as it broadens to the outside of where you currently are in the market, it's saying I'm going to do an extreme match to what I've just done, but into the upside. So like on this one here, we've got this uptrend and we've got this consolidation. And at number 4 is the extreme point off of the highs, but now it's going to make a number 5 with a breakout. Now, once that happens on that breakout, I'm going to show you on the next slide, is there's a huge move to the upside. Just like when we do our range boxes, if you haven't seen that message, go look at our range box, consolidation, breakout, and how to see on targets on that. But right now, so we've got this breakout on number 5 going to the upside, and also now you have this line coming down. It's a bearish. You have a 1, 2, 3, 4, 5. Usually the transition time is 5 points on a megaphone. And you can see as they get bigger, you have these 2 trend lines showing that it's broadening to the outside as the market is opening, and then basically it breaks out and it would have a down trend there. So here's what we're talking about. We got this uptrend here. We got this consolidation. Basically down here to the high of the megaphone is the range. So at the widest part of the range, that's where you're going to anticipate what the next move is. And so here you go. You got this breakout right here, and it takes the range from this line to the target, and that's where you should anticipate your target to go. Now, what they do is they tell you once you break out of this high, you're making new highs, higher highs, right? So we know this is a high, this is a higher high, and even a higher high. What we would think of when we have this high, higher high, that we would have a low, higher low, higher low. And that's what's the difference between this and basically a normal trend would have higher lows as you're having higher highs. But with the megaphone, you actually have higher highs and then higher lows, or lower lows. Then you have a higher high and then even a lower low. And so that broadening out aspect. But again, so from this point, once it breaks out, your target is all the way to the top. So here's the thing is you can get in on this bottom resistance line, right? So you already see that this is creating support here. And what do we know about support? Support is an entry point for us, and resistance is an exit point for us. So you could do this thing 2 ways. You can get into 2 trades here at the bottom and basically hit your resistance here and take half of your shares off. That would give you probably the percentage of what you invested into that trade, so that way you can let the rest ride. Now, here's the great thing about it is you have this upper target. So you would let the other half of your portion ride up to this upper target, which would give you an extreme amount of money based on the money that you invested here at support. So right now we see that XLP is making this megaphone pattern, right? And so we can see that in anticipation of the breakout of this high that are going to probably go up to about $82. So if we were to measure this from the low of the megaphone to the top of the megaphone, that's actually almost 38% profit. So if you were to take that from the bottom of this line all the way up to your target, you're talking about almost 72% profit. And when does the market give you 72% profit? With a very good indication. And again, you can get into this trade at around $50, and once it hits this high, take half your shares out and let it ride, or stay in with just 1 share, 2 shares, whatever meets your account. Next one that we have is XLF. We got XLF right here, and on XLF we have a megaphone also. So you can see that the narrow part is basically where you start to, come into play. You have resistance here, support, resistance, support, and if we were to take this, the high would be your first selling point. Target would be almost 70% profit. 70% profit is a good trade. I don't know what you're thinking about, what you want to get in at, to how much you're going to make. Sometimes we just kind of blindly go go in and we're like, oh, Tesla, I'm going to make millions of dollars. But there is a support and resistance where you should know your price before you enter. You should know how much risk you have, how much loss you could take. Are you willing to just go in for $100 and lose that $100 if it goes all the way to zero? Or are you trying to calculate and maybe take 10%? If you lose 10%, you'll take your money back out of the market. You got to have a plan. And this is what I love about this megaphone pattern is that it gives you the ability to have a plan. So this could go up to 136% on XLF. And you say, well, I don't know if megaphones work. Well, let's just look back here. You see this? Here we are again. We've got a megaphone pattern. And so if we take these lows up here to the highs, it's 63%. If we were then to double that, we would duplicate this line and take it to here, which is basically, you can see this breakout into here. And where's price go? It goes all the way up to here, even a little bit higher, just depending on how you draw that megaphone line out. So what do we see? We see that we have another one. We have a line here, and we got this, right? So that's support. You got another support line. You got another support line. Then you've got this up movement here where it's getting higher highs, higher highs, higher highs. You get this breakout right here. So basically, if we were to take that line there, that's 37%. We duplicate that and bring this line up. We'll see that, boom, it hits the target and then some. So is this a pattern that we see over and over in the market that has success? Yes, absolutely, 100%. So that should give us the confidence here on XLF that we could buy in at $20 and set our target for $45 and feel comfortable because we've seen based the results of the past. There's XLI. So on XLI, same exact thing. We see megaphone patterns in the past. And do they work? Yes, they work. They duplicate up. And look at this nice trend right here. And we're always thinking, man, I wish I could get into trends like that. I'm showing you right now exactly how to get in, like this was at $45, how to get in and ride this thing up to $80. I mean, wouldn't you sound like the smartest person at your office? You're like, man, I got into the market at $45 and I went all the way up to $80. You know, you're doubling your money, you're tripling your money on patterns like this. And so let's look again. Here we are. We've got $45, which is actually support back here. So that's just another added confirmation that we are at support. Where do we buy? We buy at support. And so we take this and we buy from $50, $55, and it goes up to $100, $122, $125 is where we would take some of our profits. And of course, we need to talk about, the dollar average, calculation. What would it be like if you got in $100 at $50 and then you got in another $100 at, $47? Basically, the average of the entry points that you get into. And I want to just kind of, not always think that there's one dollar amount to get in at, but maybe set your trade up to where you do 200, you do 300, you do 500 per stock. So this is XLF. So maybe if I'm going to be doing this at $500 for entry, I might divide it up into $175, dollar unit, or basically $150. So I'd get 3 shares at 50. I'd get another 3 shares at 47. Might try to say, well, if it even goes down to $45, I'd get another 3 shares, which would accumulate $500. And so it would average me out probably at about $46. And that's what I'm trying to say. Don't think that you're always going to get in on that dime, that penny, that exact price. The market's bigger than us, and so it's going to move, and it might move 3%, it might move 4% or 5%. So don't be so dogmatic in analyzing that it's going to come to this penny, and if it doesn't come to this penny, then I'm not going to buy it. I mean, if you're at, $50, go ahead and get in, anticipating that you'll put a secondary entry point in at $47 or even $45. And that's how you can be confirmed, because you're not looking to make $1, $2, $5. You're looking for this thing to go all the way up to $82, So what's the difference if you get in $1 early or $1 late? You're averaging this thing out because you know that this pattern works over and over and over again. Until next time.